Hey folks, Dan Frio here with your opening bell for September 23rd, 2025. So yesterday, mortgage rates didn't move at all. Today, well, it's teetering on the side of either going down a little bit or just staying steady, because what we have in the background right now is Federal Chairman Powell. He's speaking later this afternoon. It will move the markets. But if we go over to here, here's the question everybody continues to ask. When will those pesky rates get down in the 5% range? So we're going to try to answer that today, because on the economic calendar, there's really not that much out there. We have manufacturing and servicing PMI coming in, and then that's about it. President Trump's going to talk, and then Federal Chairman Powell is going to talk. New home sales are coming in tomorrow. Then Thursday and Friday is kind of when the guts of all the data starts to come in. So I do have two new features that I'm going to show you guys today. These will be posted on our down below in their description. So if you want to check these out, these will be live tickers, actually, believe it or not. So it'll give you the 30-year Treasury, where it's going, and when the market's open, this will be ticking live. And then if you want to check the MBS market, if you're a mortgage person out there and you want to check where the MBS market's going, check this. It'll be a live ticker as well, and it'll be down below in the description. There'll be two links down there. One will say the MBSs, and one will say mortgage rates. So that's there to help you guys out when you're trying to figure out what's going on with these and the whys behind it. So folks, let's get over to today's news. But first off, my name is Dan Frio. I do this report each day to help you guys understand what's going on with these and the whys behind it. So let's get over to today's news. When will rates go back down to 5%? Well, there's a lot of moving parts to this. I just watched an interview on CNBC. And the person that they were analyzing, I think he was from Goldman Sachs, he said, we've been in a recession over the last 3 years. And as of March or April, we basically came out of it. And he proceeded to talk about those things. I'm going to talk about that briefly, but I don't really think that news is going to trickle into the market today. So let's get over to what the markets are really looking at. They're looking at these things right here, through here. Why? Because that's what the Federal Reserve watches. The PCE, that's the number one inflation figure that they monitor. It's coming out this week. Unemployment rate, well, we don't get that this week, but we do get the unemployment numbers every Thursday. So every Thursday, tune in. I'm going to give you the unemployment numbers and continued claims. Are those people able to get jobs back? That's a big, important move on this. Let's get over to really what factors in on mortgages. So if you're new to my channel, what we focus in on here is to try to figure out what's going on with rates. Is this bond rate through here? This is a mortgage bond. So as this thing moves, so does mortgage rates. What you have to understand is how this works. Okay, so this is the price of a bond. So it's a little bit different than if you're looking up there and seeing the yield, like on the 10-year Treasury. If you look at the 10-year Treasury, it actually gives you 4.13. This number was at 4% when the Federal Reserve cut rates. So it's up over 0.1%. That's what's actually pushing up mortgage rates. But here's what we focus in on my channel each day, right through here. This is the mortgage bond. All you need to understand is this. If the price of the bond is going up, that means rates are coming down. If the price is going down, rates are coming up. So today we got up 6. Not really going to do anything there. And the reason is there's really not much economic news. Once the manufacturing PMI and the servicing PMI hits, the markets will move. This is going to show us inflation and how the manufacturing numbers are doing. They're basically saying both of them are going to start to go down a little bit. That's if the consensus comes in, or the numbers come in where the consensus is, you're not going to really see the markets move today. Okay, so that's my expectations. Now going forward, a little bit of a different story, because on Thursday, we get durable goods orders, we get GDP, and we get initial jobless claims, plus continued claims. So that'll be a focal point for this week. And then on Friday, we get that ultimate number that the Federal Reserve monitors when it comes to all this stuff, is the PCE, the number one inflation number. So I'm going to do an analysis. I'll kind of give you my thoughts on that going into Thursday's events. Folks, I won't be here on Thursday. I'll do Thursday morning's opening bell, but then I'm going to have to go back and visit my mother back in West Virginia. So wish me good luck with that with all that stuff. Your blessings would be welcome. I guess I'll put it that way. So here's what we're seeing right now. The MBS market is up 6. So mortgage rates are going to tick down a little bit. Really no news out there. So let's get over to the equity markets and see what's happening there. But I do want to show you guys one piece of the puzzle. Treasury slip as investors await Federal Chairman Powell's remarks. I don't really think he's going to say anything today that should upset the apple cart, because nothing really transpired from last Wednesday to this Wednesday. So really, there's nothing to talk about. We didn't get any jobs numbers. We didn't get any inflationary numbers. So he's just going to continue to say, what they've been spewing over the last, couple weeks. So I'm not looking for that to really make any changes. If you go to the equity markets, it's kind of flat as a pancake there. We got the Dow Jones up 45, S&P coming off a record high, down not even a point. NASDAQ up 2. Oil's up just a tad, but it's still at $63 a barrel. So we like that number because it's helping on the inflation front. And we got the 10-year Treasury actually dropping in yield. So that's fantastic news. Let's get over to crypto. It's probably taken... No! So we have a Cinderella story, folks. Well, other than the S&P. We got the indices all the way across the board up. Oil, we're going to say it's only 70 cents, so that's okay. And then crypto's doing pretty well today as well. Nothing really in the news here. So let's go over to what the Federal Reserve's most likely going to do at the next few meetings that's coming up. So we're going to get a lot of data over the next few days. I won't be here, but next week we're going to do an analysis of saying, okay, where are we sitting now that we get the PCE numbers? And a lot of the numbers that are going to fill in this void right through here, we're going to get this week. So next week, it's going to tell us a lot of where the direction of mortgage rates are going to go. So that's one piece of the puzzle I want you guys to understand. Short term right now, there really shouldn't be any catalyst that's moving the markets one way or another, up or down. So I don't really see right through here. I'm going to say my expectations right now, short term, are going to be about 6.3 to 6.5 is my range for mortgage rates. Going a little bit longer, I'm going to say we're going to be at 6.5 or lower. My goal for the year was 6.5. Now we're just looking for that catalyst to bring us a little bit lower. So let's go back to this over here. What would it take to get the rates down to 5%? That's what everybody's asking. What's going to take is a lot of details. Okay, the unemployment rate needs to tick up just a little bit. I hate to say that, but that's one of the things the Federal Reserve is waiting for. We need GDP to stay steady, and then we need the PCE to kind of stay in line. Because here's what everybody's expecting, even the Fed. They're waiting for that inflation to pop. There's got to be a time where they're saying, okay, the tariffs are going to hit, and then when are they going to really hit and push up the unemployment or the inflation numbers? Well, it doesn't look like the tariffs are going to be that much of an impact on our inflation numbers. They're going to tick up gradually. And the good thing about some of this stuff is we didn't have all the tariffs hit, all at once, which would have been a pop in the PCE or in the inflation numbers, and then what it's hopefully went steady from there. But the issue that we have is a lot of these tariffs got kicked down the road with Trump. So then what happens is even China, we don't have a tariff agreement with China yet. So every couple weeks we get another tariff agreement, and that's kind of prolonging the inflation number. So that's one piece of the puzzle. That's another piece of the puzzle that the Federal Reserve is monitoring. And then the shift in the dynamics at the Fed. Even if you watch like CNBC and a lot of financial analysts, everybody says the data the Federal Reserve uses is lagging. So we know they're lagging. So a lot of experts are coming in right now saying, okay, we've hit bottom. The Fed from at this point is going to have to cut rates because they have to save the job market. And they even came out and said that. And a lot of people aren't expecting inflation to jump up as high as they anticipated. So the ballpark here is as long as inflation kind of stays in a realm, you don't see a major uptick at once, the markets are going to stabilize. They can take a 0.1 or a 0.2 increase. What they can't do is take a 0.3 or a 0.5 increase in the inflation numbers. Okay, that's that piece. And then the employment numbers, I hope they stay steady, but if they uptick a little bit, that's what the Federal Reserve is anticipating. And if you see that, you'll see the Fed continue to rate cut as well. So let's get over to the Federal Reserve and see what their expectations are for cuts. So we go to the CME FedWatch tool, and this is kind of what it tells us. Based on the futures market, the Mercantile Exchange, Chicago Mercantile Exchange, does in some algorithms, and they produce us or help us with this. This is the FedWatch tool. What this does is it tells us what the Federal Reserve is going to do at the next meeting, and the next meeting after that, and for the next few years. Don't really care what they're going to do in 2026, the latter part. But we're focusing in on the next few meetings. So in 36 days, the Federal Reserve is going to meet. What are they going to do? I can tell you what they're going to do. Again, there's a 91% chance they're going to cut. Okay, so how do I know? Well, let's get over to where the federal funds rate is right now. So we go over to this. The federal funds rate, they finally fixed this thing. This is from the federalreserve.gov. They reduced this rate on Wednesday. They finally fixed it on Monday. So this is the rate that the Federal Reserve controls. This is called the federal funds rate. Here's what the expectations are, what they're going to do. So they're going to cut it at the next meeting. There's a 91% chance they're going to cut. And then look at the next meeting in December. There's also a 75% chance they're going to cut then. And then from there, it's basically a coin flip. So they're expecting 2 rate cuts. I'm going to say I'm on this bandwagon as well. As long as we don't get any data that shocks on the other end of the curve, I don't think we're going to have the China tariffs or anything in by the next meeting. So these numbers should be on point. The December number might be up in the air based on some of the PCE numbers that we get, some further jobs report numbers. So this is going to be, I'll put a question mark in front of the December one, but I'm pretty sure that the October one is built in, and the markets are expecting this. So if they don't come in and cut, the markets, you're going to see a tough time in the markets overall. So talking about the markets, let's get over to this. On Tuesdays, what I do is I come in and I do a Stock Talk Tuesday where I talk to you guys how to invest. What is the Dow Jones? How do you buy a stock? What is a stock? How do you analyze a stock? Well, today what we're going to talk about is what's powering, the keyword powering, the AI revelation. So a couple months ago, we actually chose a nuclear stock right through here, OKLO. That's what we're going to talk about today. So to prep for this video, check it out and check out some of the power companies or nuclear power plants. Look at this one. If you go across here, we bought this stock in May of this year. What has it done? Well, if you go across here, it is up 100. I got to get my head out of the way. This one's exciting. It is up 160% over the last 6 months. You want to find out a little bit more about this and other investments you might want to look at to power this AI trade? Well, join me today at 2 o'clock where we talk Stock Talk Tuesday with Dan Frio, where I help you understand the stock market, the cryptocurrencies, what an ETF is, and how to invest in the market. So, folks, I'm not a financial planner. I'm not a stock analyst. I just do this to help you guys out. A lot of people don't understand how the stock market works, and they're sitting on the sideline. You got to get in the game if you're looking to make some money. So, folks, my name is Dan Frio. If you want to find out more about me and what I do, just go to therateupdate.com. Here's this. So what I do, I don't just come out here and do these videos each day. I'm actually a mortgage loan officer. So if you're out there looking to buy or refinance, I'd love to help you. I'm licensed in all 50 states as well as Puerto Rico, and I have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How does this work? Well, basically, folks, I work at a bank that provides me a federal license through all 50 states as well as Puerto Rico. The bank also is set up with 30 other lenders. We can use their programs, their rates. So it's like dealing with a big broker, but we're a bank. So you have a little more comfort there. We have a little more regulations. So check us out, see how this all works. But if you got a rate quote right now and you want me to review it with over the 30 lenders we have, do me a favor. Put it right in the loan estimate review tab right through here. If you got 3 weeks or more left before you close, we're trying to do, folks, I'm not trying to steal business from any brokers or any lenders. What I'm trying to do is keep them all in check. There's many times we'll get loan estimates in and the lenders are just killing you. So we can come back with a lower rate, lower fees. And if we do, I hope to win you as a client. But we have programs like this. If you're looking to buy a home, you need a little bit of down payment money. Well, before you do anything, do one of these. Why one of these? Because you don't have to pay it back. So when you're getting a down payment assistance program, make sure it's not a loan. Make sure you don't have to pay it back. You walk away from the closing and it's forgiven because you're going to thank me. When it goes time to refinance, when rates come down even more, you're going to have an extra, if you don't do this kind of loan where it's forgivable, you're going to have an extra $7,000, $10,000, $15,000, $20,000 in down payment assistance loan that you're going to have to roll into your new loan. One, you probably don't have the equity to do so. And two, it's probably going to raise your payment. So why do it? So these are the things we help educate you guys on each day and how to maneuver if you're out there looking to buy or refinance. So folks, my name is Dan Frio. Check it out. Make sure, if you would, we're trying to hit 40,000 subscribers here in the next 30 days. Please do me a favor. If you could subscribe down there, I'd greatly appreciate it. But other than that, I'll be back at the closing bell. But we will be back today for Stock Talk Tuesday with Dan Frio at 2 o'clock. Check it out if you want to learn how to invest. But if not, check my closing bell to see what's going on with these and the whys behind it, folks. So God bless. Thanks for watching this morning. Hope to see you back at 2, but I hope to really see you back at the closing bell to see how all this mess ends for the day. Thanks for watching, folks. God bless. Be safe out there, and I'll see you later.